Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Stocks are putting their best foot forward for the start of the week. Wall Street ending the day in the green with all major indices closing higher. And what's on the horizon for Verizon? We're speaking directly with the company's CEO from one of the tech's biggest events of the year. And a game changer for basketball startup league Unrivaled. It secured a hefty round of funding for its women's hoops teams. We're speaking with the president. It's an interview you don't want to miss. Yahoo Finance is at the Goldman Sachs Communacopia and Technology Conference, and executive editor Brian Sozzi is on the ground in San Francisco with more coverage.
All right, Yahoo Finance continuing its coverage of the Goldman Sachs Communacopia Conference in San Francisco. Special guest on my set right now, that is Verizon Chairman and CEO Hans Vestberg. Hans, it's been a while. Welcome back to the Yahoo Finance set.
Thank you so much. Great to be at Yahoo Finance as always.
Yeah, no, it's good to see you. So there has been a lot going on in the telecom industry this year. I've seen there's acquisitions, there's price locks.
Yeah.
The competition price-wise has been very intense. What's your message to investors here at a conference like this?
I think that the main message for us is that Verizon has always been priding ourselves having the best network. We continue to have the best network. But more importantly is, of course, that we're building so many new vectors of growth that we haven't had before. I mean, our fiber acquisition that we are in the final process to get approval on in the first quarter of next year. We have the perk system that we have for our consumers. We have fixed wireless access that is growing. We have the whole idea of prepaid rethought. So we have several different vectors of growth that we haven't had before. And when we concluded the second quarter, we were growing nicely. We had our EBITDA growing over 4%. So I think our investors start seeing that we have built a very resilient growth engine, and then topping that with all the AI opportunities we have for customers with our AI Connect and all the fiber we have and all of that. So I think that's the main message, and then of course that we are very prudent with our capital allocation. And on Friday we announced our 19th year of increasing dividend to our shareholders. So of course for us it's important that we continue to be that financial discipline and seeing that our shareholders getting back.
Talk to us about that acquisition that you're about to close on. How does that change the financial complexion of Verizon?
So I think that
that's Frontier, right?
The Frontier deal that we are, we have all the federal improvements, we have certain states, we have a couple of states left. I think a couple of things. First of all, there are cost synergies because this was a previous footprint of Verizon, so it's easy to integrate. No acquisition is easy, but this is probably on the easier side. Secondly, we have revenue synergies because suddenly convergence, where you have both a mobility and broadband with us, is an opportunity. And finally, of course, getting into fiber, having more optionality for my customer. We're going to have, when this is approved, we're going to have fiber in 31 states. So we still have to update our investors on how much we're going to build, what are going to be the financial trajectory, what are the synergies. So we're going to do that as soon as we have more visibility on the closing of Frontier. But we are excited, and the good news is that Frontier, since we announced this 1 year ago, they have been performing really well. So that's great kudos to the whole Frontier team, how well they have been competing.
How big do you think Verizon could get in fiber?
I think that it's a little bit early to say. I mean, we said initially 30 to 40 million homes. Let's see where we're going to end up. I mean, I want to finish up this so I can be consistent in how much money I'm going to spend, what market can I address, what will it do to my revenue, what capital allocation priorities do I need to do. I want to give that full picture, and that I'm going to do as soon as I have more visibility to the closing. And so we're going to have an investor update somewhere later this year, hopefully.
I've heard, you mentioned convergence, and I have heard all year long in telecom industry, convergence wars. What is that?
I don't know it's a war, but I think that what we have seen less of before is that our customers seem to like to both have mobility service and broadband service from the same supplier. And of course we have owner's economics because we both have the broadband network and we have the wireless network. So we see some of that, so convergence is increasing. But if you think about my offering, I have fixed wireless access, which is basically 5G broadband, where we have a high convergence. Usually those customers are both wireless customer and 5G. My Fios customer, which is my fiber customers, they have fairly low penetration or not high, and Frontier is even lower. So my opportunity is very much around my fiber customers being also my wireless customers. And nowadays we can offer Fios, which is our brand for our fiber offering.
I'm a customer. I'm still a customer.
Great. So we can offer that in our stores, which we didn't do before. And of course the Frontier footprint have thousands more than 1,000 stores in the footprint that we can also use. So all this is playing into exciting future. We have several verticals that we can grow from. If it's fiber, fixed wireless access, the perk system that we have, all of that can come into play.
What do you think about some of these media companies like a Charter getting involved into the convergence scene?
No, I think that they have chosen a model where they are on our network. So Comcast and Charter are offering wireless service to their customers based on our network. So for us, it's a strategy where we build the network once, and then we want as many profitable connection as possible. And both Charter and Comcast is great enterprise customers, and they are offering to their customers, but they're doing on our network. So for us, it's part of our strategy to serve them as well as we serve our own customers with our own brand. This is white labeled, you can say.
Hans, I have like about 20 interviews here at this conference. They're all AI companies, and I was thinking about this. I'm like, these companies are sucking massive energy out of the world, and they're putting a lot of demands on networks. Like, what is this AI? It's not a moment. This AI generation. What stresses is it putting on the telecom industry?
It's going to be a great opportunity for us. But what we need to understand right now, the AI is in the first inning or whatever you say in baseball, which is not my sport, by the way. But they are building the data centers right now. The next step, when they have all the equipment there and everything, they need connections. No one has more connections in the United States when it comes to backhaul as Verizon. And then after that, you're going to move some of these applications out to the edge. That's where we have all our metro network and edge computing. So for a company like us, this is creating a great opportunity. We call it AI Connect, because ultimately you need to connect AI to the ultimate customer, either enterprise customer or consumer customers. And that's going to happen the next years to come. We have already positioned ourselves in that area. Our funnel has grown from $1 billion to $2 billion. So we continue to be working with all the hyperscalers, but also with the large enterprises that needs it.
Can these hyperscalers break the system? I'm a layperson. I mean, I just see all the energy they're using.
Of course, it's a massive energy usage. I think that's also why we're going to see a distribution of AI over time using not only large data center, they're going to be in the edge of the center or the network. We are sitting on small data centers across the country where we have our central offices, which also have power that we can offer to the AI companies. But that's the next step when they are finished with the first big training of the large language models, building the big data centers. That's when we are coming into play as a great partner for these guys.
I'm sure, Hans, you saw, SpaceX paying $17 billion for the rights for EchoStar's valuable spectrum. I mean, do you view SpaceX as a competitor in the cell phone business at some point?
I think that, first of all, I mean, the satellite guys have 4 different business cases. One is, of course, helping us with the backhaul where we don't have fiber, because ultimately we need to set. So that's a great opportunity. Here we're going to get even more of that opportunity. They, of course, are serving fleets of aircrafts and boats, which are not doing, which is a great and important service. Then they have this service called direct to device, which cover places where Verizon is not covered. I mean, we cover where every person lives in the United States, but there's a lot of landmass where we're not even allowed to build in a national park. I want our customers to have access to text and calls there. And we already have that service with satellite companies like AST, with Skylo, over both the iPhones and the Android phones. This is just creating another opportunity to work with the fourth one. That's how I read it.
But do you view them as a competitive threat?
I think they are more a complementary to my offering. They can, of course, compete in broadband to consumers. We have many other competitors there. So, of course, I'm not naive. They will compete with us in some areas, but I also see them very complementary and adding to my opportunity to serve my customers even better.
$17 billion, that's a lot for Spectrum.
Every billion is a big, No, it's a big, I cannot judge why they, on the value, but of course it's a lot of money.
All right, we will leave it there. Hans, it's nice to see you. It's been a while.
Thank you so much.
I always appreciate you coming on. Verizon Chairman and CEO Hans Vestberg. We'll talk to you soon.
Stick around. Much more Ask for a Trend still to come. Women's basketball startup Unrivaled is banking on breaking barriers. It just secured new funding led by Bessemer to fuel growth and expand its reach. Alex Bazzell is president of the league and joins us now. Alex, welcome to the show. Maybe start here, Alex, just for the unfamiliar, the uninitiated, Alex, just walk us through Unrivaled, the sport, the league, the opportunity as you see it.
Yeah, and I appreciate you having me. So, what Unrivaled is this collection of the most talented women's basketball players in the world. All of our players also play in the WNBA. We're a big believer that the driver of a lot of economic growth, especially in sports, is led by star power. And, we believe we have pretty much all of it. So we're pretty excited about just our collective of rosters of athletes that are also our largest majority shareholders. So what's so unique about this model, it's not only contingent on players, but it's actually led by the players as being owners and co-founders and so on and so forth. But in our sport, we run during the offseason, the WNBA. It's kind of a compressed full court of 3-on-3, high energy, ton of excitement, really to focus on the star power and inevitably create a really interesting product for the fans.
And so the news here, Alex, so Series B funding round led by Bessemer. Doesn't sound like you are disclosing, Alex, how much you raised exactly, but walk us through what this means for the league, how you intend to put that money to work.
Yeah, I think like anything, we exceeded expectations in season one. So what this does, it allows us to really expedite our timeline. We have a lot of vision for how we can expand the league, add more players, eventually get out on the market and a tour, which we'll be doing this year for the first time out of our home base in Miami. So I think it just allows us to be a little bit more aggressive and inevitably look for openings in the marketplace that may exist based on where we're going. So, for instance, last year, we had a great television partner, long-term partner in TNT. Every single game for us is broadcast. We had 6 teams in the league. We want to grow that. We want to go to different markets and we want to expand our game. So I think for us, it's just a testament to the work we've done in a short amount of time. And then from a capital perspective, we also want to make sure that we're staying very high growth, but also very sustainable and responsible at the same time.
Alex, how many people are watching? What kind of eyeballs do you get? What do demand signals look like?
Yeah, it's a great question. So one thing we're excited about is in our first year, which a lot of people, it's hard to build brand awareness, but because of our athletes, we were able to do that. But we're already the number 2 on average most viewed women's sports property in the world. We were able to outperform what the NWSL did in terms of their regular season based on our regular season. So I think we sit in a pretty comfortable spot. And I think the other testament to our excitement is our numbers grew from the start of the year to the end of the year. It wasn't a flash in the pan with heavy excitement where it fell off a cliff. So we ended up averaging about 220,000 viewers per game on TNT. It's obviously a number we hope to grow, but for year one, we're pretty excited about those results.
And what would you say, Alex, your kind of competitive mode is here? What would stop a competitor from stepping in and cloning this model?
It's a good question. I think ultimately it's the talent. We have most of our roster who signed for at least 2 years, if not 3 years. I think, one of the biggest names coming out of college from UConn to the pros this year is Paige Beckers. Paige Beckers just signed a 3-year deal with us. So I think for us, the mode is talent. I don't think it's any secret around that, right? Like, of course, we believe in our product. We believe in our people. We believe in what we stand for. But at the end of the day, it's the best players in the world. If we have the best players in the world, we're going to have a strong likelihood of succeeding.
Who's your fan, Alex? What's the average demo?
Yeah, it's a majority women. So about 60% of our audience is women. The largest contingency being ages 18 to 35. And I think that's significant for us and why so many brands have grown excited about Unrivaled. We have over 20 different brand partners. That's soon to increase, so from some of the biggest brands in the world like Samsung, Sephora, State Farm, Wilson, so on and so forth. But, women are driving consumer behavior in households, and that is our collective audience of viewership.
Your players, Alex, how do they get paid? Is it salary, Alex? Is it equity in the league? Is it a mix of both?
Yeah, we treat ourselves like a startup. We don't come in here with the guardrails that most leagues do. Players get a salary, which is the highest average salaries across all professional women's sports. So they're paid very well for their time in Miami. And then secondly, they have equity. that vest over a 4-year period, just like any startup does. And that equity varies based on who it is. But, some players have a very significant chunk. And I think our hope is over the long term, that's going to be way more lucrative for them than even what we're paying them on the court, which also happens to be very healthy salaries.
Alex, great to have you on the show today. Thanks so much for your time.
I appreciate you having me.
Well, markets closed the trading day higher. Let's bring in senior reporter Alex now with some of the trading day takeaways. Allie.
Hi, Josh. Well, markets are pretty much waiting for that inflation data due later this week. I mean, it was not a bad day in markets. If we take a look at the major indexes, you're seeing them close all in the green. We have up around 100 points for the Dow, NASDAQ up around 0.5%, S&P up marginally. Some individual movers. If we take a look at the trending tickers page, you'll see AITCO up a whopping 3,000%. That Dan Ives-backed company getting into the crypto space, maybe a little bit of memification in there. But in terms of the broader indexes, not too much. So really it's the inflation story that we're waiting on. And you'll see that core CPI is expected to come in at 3.1% year over year. The all items increase 2.7%. We are significantly above the Fed's 2% target. That is leading to questions on what we could see next week when it comes to rate cuts. Right now, markets are pretty much pricing in with 100% certainty that we'll see 25 basis points, but 50 bips is now on the table. If you take a look at the latest CME Fed Watch tool, these are where the odds are. 88% for 25 basis points, 12% for that jumbo 50 basis point cut. I think it would take a massive upswing in CPI to really change the calculus here for the Fed. That being said, some FOMC officials did say they want to see where inflation comes in before really subscribing to that September rate cut. Again, to be determined. But if we take a look at the argument against Fed cuts, that was something I was focused on this morning because not all strategists seem to say that automatically we are going to see this surge in the rally just because we get cuts. Ed Yardeni, he's a friend of the show. He talked about how right now the economy doesn't need rate cuts at this point. And if we do see those rate cuts, that could potentially fuel a market melt up where you have a lot of speculation, a lot of money flowing into markets that maybe are a little bit detached from the fundamentals. And if that happens, then you can see a market come down potentially. But at the same time, David Kostin, he's talking about small cap getting a bid. And if you take a look at a month to date here, you'll see up 8% on the heels of those expected rate cuts, obviously outpacing the S&P. So just a lot of back and forth when it comes to what ultimately will happen and how the economy and the markets are going to digest all this.
Yeah, I mean, I've had a number of folks banging the table on small caps recently. The argument being, as you said, Allie, their argument being economy's hanging in there, the Fed's going to cut, it's good news for those pint-sized companies.
Right, but if the economy's falling off a cliff, no rate cuts is going to help anything. So I think that is really the takeaway from some strategists.
With week one of the NFL season just about in the books, gaming companies are opening theirs to an evolving landscape for sports betting. For more, we're bringing in Adam Greenblatt, CEO of BetMGM. Adam, it's always good to see you. So the NFL is back. Adam, what's going to be new at BetMGM this season? Why should folks come to you rather than rival?
Well, that's a great question. First thing to say is that BetMGM is healthier than it's ever been. Our product is in the best shape that it's ever been. We've got a ton of new product features coming. Happy to dive into any element of this. And so if you like BetMGM before, there's no better time to be a BetMGM customer than right now. And it's across the board. We have a brand new brand campaign. And the essence of it, in fact, that's a great place to start. The essence of it is BetMGM, and this is the platform of our new brand campaign, makes the ordinary extraordinary. It makes watching a game that you love even more extraordinary. And that's all the way through the business. We do that for our players. We do that for our colleagues. So yeah, there's lots of reasons.
Are there new features, Adam, new experiences that I'm gonna enjoy this season?
Absolutely, Josh. Look, the app itself, we've worked very hard at making the app as fast and friction-free as possible. And so one of the things you'll see new this season at BetMGM, we're introducing live same-game parlay offering for the NFL, which means that our players will be able to continue to build same-game parlays before and during the game and cash out all of those during the game. We've also delivered what the headline is betting insights. So it's insights into team and players that are integrated right into the app. So you can build confidence and conviction around your opinion without ever leaving the app. We've also rolled out sleek dark mode. We have a new rewards integration, new ways of building parlays. There's a lot to be excited about, Josh.
You know, Adam, let's talk about the macro for a second, because every day on the show we talk about the economy, and there are concerns, Adam, about a possible slowdown, about the Trump tariffs. I'm just curious whether that has shown up. Has that bubbled up in your business, Adam, at all in terms of betting sizes or behaviors or patterns?
Well, that's so. The short answer is our players are very excited that the NFL is back, and they have come back in record numbers. And I'll come back to the specifics in a moment. Last night's game, Bills-Ravens, was the most handle we have taken on any single NFL game ever. And second was the season opener on Thursday. And so then breaking it down on a player level, to answer your macros question, we're seeing players come back more often than they did last season. Average bet size is remarkably consistent, so no pressure on average bet size. Number of bets per session, per player, per week, really consistent, and in fact, increasing. So we're seeing on ground level, at a player level, we're seeing no impact really of what is a challenging external environment.
What about, Adam, the iGaming business? So folks playing slots on their phones, what are the trends there?
Well, you may recall that at BetMGM, our iGaming business represents 2/3 of our revenue. And in the first half, we grew at almost 30% year on year. We are seeing that business just charging. And in fact, we've had the last few days, as the season has started, we've seen record numbers of players come out into our iGaming business, of course, helped by the fact that on an average week, about 60% of our sports players also go and check out the iGaming offering that we have, which is first class.
Adam, are you still intending to expand into new jurisdictions this year?
So that's we're excited. We're on countdown. We're going to see our next the next sports betting jurisdiction, which is the state of Missouri. We're on countdown. We're 70 days away of pre-registration. That market starts. You can make your first bet on December 1st. We will be there on day one. You can bet your bottom dollar on that. And as we look into 2026, we're particularly excited about the launch of the province of Alberta, north of our border, because that's both a sports betting and an iGaming jurisdiction.
Adam,
mid-26.
Always great to have you on the program. Thank you so much for joining us.
Thanks for having me.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.